Hello and thanks for joining me for our March Bayside commercial update. We're a little later than normal with our newsletter this month. We were on the receiving end of Tropical Cyclone Alfred here in the Redlands, with widespread damage to a lot of properties within our portfolio. Our own office was without power for about 5 days, meaning our team worked remotely during the peak of the storm to coordinate the repair and recovery items needed to get businesses back up and running as quickly as possible. Fortunately, the vast majority of the damage has been relatively minor, and with some blue skies above for a little while, we hope to have the majority of repairs completed within the next couple of weeks. This weather event does raise the topic of how we can be better prepared for future events. Proactive maintenance is obviously an important part of this conversation, and those property owners who have been diligent were duly rewarded with a minimum of issues. With most Baysiders losing power for up to a week, some genuine discussions need to be had around the ongoing maintenance of trees that are impacting on the security of power supply in this type of storm. It's a constant battle to get the balance right, but it does appear to have tipped a little too far in favour of the trees. At a time when the cost of insurance is already an issue, the extraordinary losses being faced by businesses and families simply because the lights couldn't be kept on will further exacerbate this problem. Councils have a lot to ponder here. Commercial activity in the Redlands otherwise continues largely unabated, further underscoring the strength of the Bayside as population growth and a lack of new supply combine to drive demand. Redlands Business Park at Redland Bay is seeing plenty of construction activity again, with new stock now on market. This hugely popular estate has some really well-designed assets currently available for both lease and sale. Given the relative pricing when compared to surrounding pockets, this park presents great value on both fronts. Capalaba is seeing continued strong activity with a number of smaller strata industrial units transacting at record price levels, with rates of $4,000 a square metre becoming more the norm rather than the exception. Investor appetite shows no signs of waning either, with strong results in both Wynnum and Cleveland for assets in the $2 million plus range. With the recent interest rate cut impacting deposit rates, cash flow reliant investors are putting pressure on yields, and we expect to see some ongoing tightening in that space, with competition forcing yields as low as 5%. This will still sit well above deposit rates, but is tighter than current lending rates, creating an interesting market dynamic which will force many people to look at what LVR is now sustainable long term. It's also the time of year when we need to plan for the end of financial year. With the Easter break nearly on us, June 30 will be here in no time, and tax planning needs to start now. If this involves either the disposal or acquisition of property, the clock is ticking. Our team remains on standby to assist in any way. That's it from me this month. Thanks for joining me, and I'll see you next month. Cheers.